Monday, July 15th, 2019, Maneco 64, home of alternative economics and contrarian views. So there's quite a bit of economic data this week, and I'll go over them this morning. Also, some of the data that have already come out this morning out of China that are quite interesting. I also want to give an update to some viewers who have asked about cryptocurrencies, whether gold investments would accept Bitcoin for precious metals, for physical gold and silver. I do have an update on that. So before that though, let's look at the markets, what they're doing. I want to also look at the gold chart, a monthly chart, going back about 9 years, almost 10 years, and show you why that 1380 level is so important in the long term and right now. So I am a little early this morning. I got up quite early. It's at 6:45 a.m. London. So the markets are still fairly quiet in Europe. Very quiet, I would say. But be as it may, let's see what the markets are doing here. We've got spot gold, 1412. It's down just under $4. The range has been 1409 to 1420. I saw late yesterday, London time, when COMEX opened around 6 p.m. New York time or Eastern time. Gold opened quite well, got up to 1420. Looks like it's turned around overnight a little bit. As I said, still consolidating, and I'll come to the chart after I've looked at the other prices. We got silver at 1520, down about 2 cents. A range has been 1515 to 1527, so fairly quiet there as well. We got the Dow up 8 points, so not much going on here. 27,336. S&P unchanged, 3,013. The Nasdaq 100 future is at 79.38, down about 4 points. Currencies, cable or sterling or British pound, whatever you want to call it, 125.68. It's only down about 0.05%. The euro is virtually unchanged, 112.72. Dollar, yen, the dollar's up 0.1% against the yen, 108.03. And the dollar's down slightly against the yuan at 687.35. Crude oil, WTI, trading right at $60. It's down 0.4%. Brent crude is down 0.4 as well at 66.27. 10-year yield is up almost 2 basis points at 212. So that's up a little bit, the yield. Price is down a little bit. The rest of the curve, actually, yields are down a little bit, like in the 7-year, 5-year. 3-month is at 214. So the curve's still slightly inverted. I saw an article a few weeks ago that was talking about how an inverted yield curve, of course, points towards a recession, but also when that inverted yield curve disinverts and starts steepening, it actually a lot of times mean that we are in a recession. Yesterday I made a live stream and I spoke about how the New York Federal Reserve Bank index for recession is at 32. And apparently since the 1960s, or since 1960, anytime that number's gotten to 30 or higher, that has meant a recession. I've been saying here in this channel for months now, especially when the curve started inverting, that it was a sign that things weren't well. Of course, central bankers, mainstream economists, they're always going to play the possibility of a recession down. And why is that? Well, because they want to keep their debt-fueled system going. They want the public to be blind to these dangers, and so that the public keeps holding the bag right until the end, right when all the insiders and the 1% have gotten out, and they get hurt the most. Yesterday I spoke as well about IMF, the guy who's in charge now until they get a new president, as Lagarde is going to be president of the ECB. He said, David Lipton, that major central banks should start cutting again, that things are slowing down. So there is a lot of worries out there about the economy, but that's not being told to the general public. I think general public thinks we got the greatest economy ever, especially in the US. All the statistics are great. President Trump keeps tweeting it out. And yeah, I think people need to be aware that things aren't as great as they are. So let's quickly look at the gold chart I spoke about earlier. It's a monthly chart. I've spoken about this 1380 level before because it's the 38.2% or the 61.8% retracement. Here it says 61.8, but it's the 61. So let's look at the gold chart now. It's a monthly gold chart, as you can see, all the way back to 2010 when we started seeing gold move higher towards that 1921 all-time high. And then we've had, of course, a bear market since then. But I would argue that we've started actually. So let's look at the monthly chart of gold that I was talking about. You can see here since 2010, you can see the move higher to the all-time high at 1921. You can see the big correction down to 1,046 in December of 2015. So the reason why I've spoken about this 1380 level is because it's a very important retracement level. Some of you might not know or might not buy into Fibonacci retracement and the golden mean Fibonacci levels, but a lot of people in the markets look at that, and the Fibonacci or the golden mean or phi is something that happens very often in nature. And I'll put a link to one of the videos I did about this and about the 1380 level below in the description, and also up in the card, so you can listen to what it's all about, because this is my purpose here in this video, is just to show you how this 1380 level is so important. So ever since excuse me, December 2015, we've been consolidating basically between 1,150 and 1350. 1375, of course, was the high on July 4th, 2016. So we needed to break out to get out of that range, and we have, especially in June. Gold made a huge move just above 1,300 all the way to 1,440, and that's why we're consolidating right now, because in markets things don't go up and down in a straight line. They do correct or consolidate. It's just like in nature. If you go running and you run too fast, you have to slow down to take a breather. It's the same thing with markets. Very simple. And you can see here 61.8 is the reciprocal, of course, of 38.2. So we're 61.8% from the top, or you can look at it as 38.2 from the bottom. And that's why that 1380 level has been so important. And you can see that the pullback that we've had this month actually went back almost right to that level, 1382, I think. And you might think, oh, that wasn't exact. But I have to say, in a monthly chart going back almost 10 years, that's quite exact. And I've noticed as well recently, when we've gone down in gold, we've gone down to around the mid 1380s. So that's a key level there. Does that mean gold's not going to go below that level anymore? So does that mean that gold's never going to go back below 1380? No, it doesn't. You never know with markets. We could still go back down and retest it again and even go a little lower. But right now it's looking pretty good. On the upside, of course, 1440 now is a key resistance. And then you can see here the 50% retracement as well is a lot of times looked at. And that's 1483. That's the 50% of the move we've had from 1921 to 1046. What about China this morning? I mean, if you look at the headlines, a lot of them saying Chinese GDP, the lowest ever in 30 years. And for the average person out there that sees that headline, that hasn't worked in financial markets or in finance like I have, they think, wow, markets should be lower if things are not great. But you need to look at what was expected. Markets, they always look at economic data or comments by central bankers or whatever. And if it's in line with what people expect, markets actually don't do much and sometimes even go up. Sometimes down, but they don't do that much. So if you look here at investing.com, Chinese GDP was forecast to come out at 6.2% year on year, annualized in the second quarter. So it actually came out at 6.2. So nothing really surprising. So that was already priced in. There were some numbers that were a little better. Industrial production expected 5.2, came out 6.3. Retail sales as well, 9.8, expected 8.5. What about the rest of the world this week? There's not much in terms of data today, but Tuesday we've got some employment or unemployment data for the UK. In the US, we've got actually retail sales, which is quite important. We got industrial production, capacity utilization. So that's going to be important, retail sales, seeing that the consumer spending is 70% almost of GDP of the US economy. What about Wednesday? We got in the UK, we've got PPI, we got CPI, what people call inflation data. I like to say they're price data, right? They're an index of prices because inflation, as many of you might know, is not these numbers. Inflation is the excess creation of money and credit above the level of savings. All the debt that's been creating, the money supply growing, that's inflation. What we get in terms of prices, that's the consequence of inflation. And that's what we need to focus on. We shouldn't buy into when central bankers say, well, CPI is below 2%, we are concerned about low inflation, because that's rubbish. We know the cost of living is rising for everyone. What about in the US on Wednesday? Well, we've got some housing numbers. We've got building permits and housing starts. And on Thursday, we've got retail sales in the UK. And for the US, we have the usual jobless claims, a weekly number. We've also got the Philadelphia Fed, which is closely followed, Philadelphia Fed Index. And on Friday, for the US, we've got University of Michigan consumer sentiment numbers, which is also another number that's closely followed by the markets. So that's what's out there this week. What about gold investments? Yes, the last time I spoke to Oliver Temple, I went to see him. He said they're looking to accept cryptocurrencies. First of all, Bitcoin for gold and silver, physical gold and silver. So they will accept directly. And that would be interesting. I need to get an update from him, seeing if that's going on already, or if he has an ETA for when that will happen. What about cryptocurrencies, how they're doing this morning? Yeah, they haven't been doing well. Cryptocurrencies, especially the alternative coins or altcoins as they call it, Bitcoin also traded below 10,000 this morning. Right now it's at 10,171. We've seen some of the altcoins recover here, but I'm not concerned. As I've said, I have a small fraction of my savings in cryptocurrencies, as I think they're highly speculative, but I think the blockchain technology, the decentralization has a great future, and we are only in the infancy of this. Many people don't really understand when they think of cryptocurrencies and Bitcoin. They think they're like just a scam, that they're digital currencies like President Trump, but they don't quite understand how the blockchain technology is actually trying to decentralize and make the system trustless. What does that mean, trustless? Well, that you can be certain that everything that goes on within the blockchain is public for everyone. There's no hiding of anything like the Fed does, right? They don't want to be audited. So that's the other aspect of cryptocurrencies, in my opinion, that are important. Yeah, I'm holding on. I'm not concerned. As I've said before, if you are going to put some money into cryptocurrencies, you got to be prepared for these gut-wrenching moves. And that's why yeah, you need to do your homework as well. Don't just listen to me. These are just all my opinions. I'm not pushing anyone to do anything in precious metals or cryptocurrencies or anything for that matter. I'm just trying to give you my honest view of what's going on. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great start of the week. Take care. Bye.